Hello trader. Welcome to a new vector guide. Today we will talk about two volatility indicators, historical volatility and implied volatility. The volatility of a crypto asset can be understood as a way to measure the uncertainty when it comes to future changes in price. The historical volatility measures the price variation of a crypto asset over a period of time in the past. For example, a week, a month, or even a year. Because it is related to past events, it doesn't necessarily reflect future price trends. It's just an estimation that can guide us when it comes to price movements. In general, the historical volatility is used as a risk measure. Although price hikes are as risky as downward movements in prices, the price volatility of crypto assets is a deviation of daily returns. To calculate the historical volatility, you have to use the square root of 252 multiplied by the standard deviation of returns in n periods. In order to make this easier, let's see a practical example. To add this indicator to your chart, click on Indicators and search for Historical Volatility. Add to a new window. And that's it. In our analysis, we are also going to use the Implied Volatility indicator. As we have said before, historical volatility shows the past volatility. The Implied Volatility indicator shows the current volatility of an asset. When you use both indicators at the same time, you'll understand the current state of the market, whether the volatility is higher or lower than it usually is. You can use these opportunities to trade. In order to add a new indicator, go to Add Indicator. Search for Implied Volatility. Add to a new window. And that's it. You can see that there is an implied volatility lower than the historical volatility. This could be a good moment to buy, because the volatility is lower than usual, but it's not that aggressive. You can see that the difference is minimal. But if the implied volatility indicator were higher than the historical volatility, then it could be a good opportunity to sell, because the volatility would have been higher than usual. But it is important to highlight that each crypto asset has a different historical volatility, right? So you can't use the data about one asset to analyze another one. I hope that you can now understand how these indicators work. If you have any doubts, leave them in the comments section and we will answer it. I'll see you in the next vector guide. See you.